Blowout US jobs report. Are the cuts delayed? Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard, as the Ainslie Group celebrates 50 years. Today, welcome back Sam, who's been looking into that surprising jobs number we got on Friday night, our time, and what we can expect from the Fed going forward as a result. So, how are you going today, Sam?
Good, Chris. Good to be back with you.
So, very interesting situation on Friday night. We had the Bears celebrating because the S&P sort of had started to, looking really good, but then it started to drop. It was pretty short-lived, wasn't it? What's going on?
So there were 335,000 jobs added, and there were only 180,000 expected. So that's almost double the expectation of job creation. So it was a astonishingly good non-farm payroll report. And as everybody knows, that comes out late Friday night Australian time, so it comes out right before the market closes. So the S&P was looking horrible, like it was going to be the short of a lifetime. Big red candle, and then that popped right back up before the market closed. So pretty shocking turnaround. The same thing did happen, though, pretty similar in January 2023. So it was pretty much an echo of last January.
So, I mean, we know, and we'll get into this a little bit later, there's been lots of talk that we've had around these numbers being all over the place in terms of how much you
Mm.
can rely on them. But let's assume for the moment that those numbers are accurate. Do you think this has a material impact in terms of what the Fed plans to do?
Absolutely. I think this is exactly what they wanted to see. If their plan is to hold rates higher and try to crash the markets, just for example, but that's changed the speculators' outlook as well, because everyone was saying, oh, they'll probably cut in March, and now that's changed to around May to June.
Hmm.
So it's far too good of a number to come out and say, oh, the interest rates are too high, everyone's struggling. At least on the face of it, it looks too good to be something to challenge.
Yeah, and I suppose that's what they can always fall back on, regardless of whether we believe those numbers or not. At the end of the day, that was what the number said, and it
Mhm.
gives them at least reason to pause for longer. But if we turn this to what we all like to talk about here, which is gold, this potentially could be bad for gold, could it? Because I mean, you saw the US dollar really strengthening on that news, where we were expecting the US dollar to potentially fall, which we would expect to be good for gold. How do you see this unfolding or playing out for the gold price?
Well, only if the Australian Central Bank, the RBA, catches up and talks tougher, because so far
Mm.
the Australian dollar against the US dollar has been on a really weak trend. It's just been wavering downwards for months and months. So what happened when this news came out was AUD USD immediately tanked. It immediately sharply dropped downward, tried to recover, and then got rejected again. So if you look at the Australian dollar right now, very, very weak. And what that means is gold AUD has gone up. So gold AUD has been retesting its all-time high. So anyone who's been buying gold to hedge against Australian dollar weakness,
Mm.
well, they did the right thing, because um, gold against Australian dollar has been very, very strong, and it looks like that jobs data just solidified that. So we may see that keep going and potentially retest all-time highs.
And that's certainly something we talk about, across the spectrum here. This idea of gold acting as that currency debasement hedge, and we're seeing that in action here with the Australian dollar and that weakness. And like you said, there's really nothing to indicate that Australia will be following that path, because everything we seem to be hearing at the moment is pressure building on our central bank to actually cut rates, particularly politically.
Yeah, and our housing market really depends on it as well. It's such a big part of the market here in Australia. That being said, gold dipping in US dollar terms, I mean, that's very temporary. We're talking about a matter of a few months potentially, until people panic and are trying to all jump out of the currency and get into something that holds its value. So it's um, very, very temporary, but that's how markets are now. Markets have ADHD. People want to make money today and tomorrow. They don't really care about what's going to happen next week. They just want today. So But luckily enough for us, for anyone who's bought gold in Australia, well, today was a good day, or the last trading day was a good day.
Yeah, and I think it could be a little bit of insight into the future of how it's going to look when more generally that's happening across multiple currencies. But yeah,
Yeah.
certainly good to be in the Australian dollar at the moment when sorry, in gold in Australian dollars at the moment when you look at what's been happening. So if we just turn back a little bit to certainly something we've covered before, we don't really trust those job numbers. We know that the revisions are the problem, right? Like, so it might come out with a
Yeah.
strong number on Friday, but then next month we see massive revisions the other way. Do you see that being the case here today with what we saw from Friday? Was there anything that you noticed in particular, or any issues in particular with that data from Friday that we should really be paying attention to if we dig a little bit deeper?
Well, there were employers reduced regular work hours and overtime in response to the increased wages. So you can't just get something from nothing. Wages have gone up. Okay, that's good news. Well, guess what? If you want your wages to go up to help fight the inflation that the Fed created, you're going to have to pay more. And where's that money going to come from? So they have to cut hours. So that's another problem. And then the other problem with that is the real unemployment rate. It's funny, we have terms like real unemployment. So what's the fake unemployment? So, but real
Seems that way.
unemployment, um, all that does is it includes, the marginally attached workforce that rose to 7.2%. So the number of employees working part-time reached the highest level since June 2021. And if you look back to June 2021, that was pretty bad time. That wasn't too far after the big crash came. There was easy money, but there were a lot of people unemployed still. So if you just think about it, someone having to work two part-time jobs to try to pay their rising mortgage costs, that's not a fantastic situation, even though you're just looking at a linear, you're looking through a really linear perspective. You're looking at one number specifically going up. Oh, it's almost double our expectations. Great. But that could be people getting part-time jobs and things like that. It's really not that indicative of a strong economy. It's more indicative of a workforce being spread thin out of desperation.
And that desperation is a really interesting point to explore a bit more as well, because when you look at this against the backdrop of the debt situation, particularly in the US, are these people really just having these extra jobs? Do you need to have two part-time jobs just to survive? Is it that, that we talk about the past where you had a single income family was enough, a single income was enough to support a family. That's clearly not the case now where you need dual incomes. But is it even worse than that, where you possibly need dual incomes with multiple part-time jobs to even make ends meet against that backdrop of what we know is just an extraordinary debt situation?
Yeah, mom and dad having 4 to 5 jobs, combined isn't. It's definitely not a good thing, because people don't just. We know people don't usually get 2 or 3 jobs just for fun,
Yes.
because they want to be more stimulated. They do it because they need to and because they can't get more hours. And that lines up with what we talked about before about the wages increasing. So employers just cut hours. When you cut hours, you have to go fight for another part-time job to fill in those hours. So,
Yeah,
yeah.
it's a tricky situation, and it's certainly, well, it's important to look beyond the headline number. We've identified that time and time again because it's not really telling the whole story. But certainly for the moment, it appears as though the part of the story that's been going to be picked up is the potential for that holding rates where they are, because there's no real pressure on the Fed, at least for now, to do anything about it.
Yeah. And let's see what Jerome Powell says in his interview, which should be coming out soon as well.
All right. Well, thank you for your work on that today, and we'll stay tuned to hear what Powell has to say, and when you bring that back to us later in the week. So thank you for that, Sam.
Thanks, Chris.
Thanks everyone for watching. We'll chat again soon.